Overall, I would say it's a little early to try to predict the exact impact of the spread of coronavirus on the economy. I do think obviously we're seeing the growth in terms of the spread of the virus. We've seen the mortality rates.
Yes.
There are some parallels to 2003 SARS crisis, but there are a lot many more differences just from the standpoint of the size of China as a country from an economic perspective, the impact of China on the global economy, the Chinese tourism, which is much more widespread than what it was 17 years ago. So it's very hard at this point to say how much impact it has. But one thing which is very clear is we do expect as the economy slows down, and you've seen that in very, very quickly in the retail, hospitality, a number of other sectors, even manufacturing, that you will see a response, a measured response from the Chinese government and the regulators with a balance of the monetary and the fiscal policy to support growth, which to some extent gives you a comfort that over the next 1, 2, or 3 quarters, you will see a rebound after the markets and the growth bottoms out.
A rebound in the Chinese economy?
I would certainly expect to see that. So for a full year, I don't think it should have a huge impact, but for this quarter, it obviously will have a negative impact on growth.
Okay, how many percents?
So, as I said, it's very early to try to gauge that, but if you look at the different estimates from various economists, I've seen numbers anywhere between, for the first quarter, going down 50 basis points to 250 basis points, with your median point around 150 for the quarter. But when you translate that to the government response, potential stimulus that comes in the system, and you think about the whole year, the downside impact might not be as big for the whole year. It is much more for this quarter where we are.
For this quarter only. Okay, that's great. Now moving on to the outlook of Asian countries' monetary policy, considering with all these things that are going on, the trade war is still going, and now we have coronavirus and also geopolitical conditions. So where do you think policy makers are heading at the moment in terms of monetary policy?
So I don't think a lot has changed on the monetary policy view we had specifically in Asia coming into the year. Given with the Fed on pause and to some extent dollar was stabilizing, our view was that we will see monetary policy easing in various Asian economies, including Indonesia, India, potentially Malaysia, and even China for that matter, and then obviously Thailand and a number of other places. So we do think we will see the monetary policy easing in this part of the world. Now, the various policymakers might have different market indicators they might look at. So, for example, in Indonesia, there might be an influence of obviously the currency or the exchange rate volatility. So, if that stabilizes, BI has ample room.
Economy, okay.
Fundamentally, economy, if you look at inflation versus where the rates are, real rates are still fairly high. So there's ample room to cut rates in Indonesia.
So you're still optimistic?
I'm still optimistic.
Okay.